Hey everyone, I got a ton of messages from yesterday's video on Microsoft's price, but a lot of people want to see technical analysis, and the way I've been watching this is as a Wyckoff accumulation phase, so that's the kind of technical analysis I'll be doing, not just your general simple moving averages, trend lines, that kind of thing, because this is the analysis that I was using, and I've also been getting a lot of questions about Wyckoff analysis in general. So let's jump into it, and before we get started, quick disclaimer, this is not financial advice, this is for educational purposes only, and this is how I'm reading the market, managing my own portfolio, thinking through trade architecture. So please hit subscribe to follow for more. I really appreciate it. Everybody's been so kind, and please leave comments. Show me what you'd want to see next. This takes a lot of time. Obviously, I'm doing this analysis for my own trade architecture, but you know, the likes and the subscriptions really help make it worth the time for me. So very quickly first, what is Wyckoff and why am I doing this type of analysis on this name right here? So Wyckoff, and it's going to be a very quick overview because I'm sure you just want to see the analysis, but Wyckoff is a market structure framework, and of course it was also a person that tries to understand whether big money is accumulating, distributing, marking price up or marking price down. Instead of just looking at indicators, it looks at price, volume, support, resistance, and whether supply or demand is in control. And of course, this has also been fundamental in a lot of current trade styles that people use for day trading. But in my opinion, this is a great OG of understanding how institutions are actually building positions and moving price. So in plain English, it's essentially a framework that's asking, are institutions quietly building a position, shaking people out, or are they preparing to move the stock higher or lower? And so when I look at Microsoft, that's the framework that's made the most sense to me. You can obviously watch other videos online about how Wyckoff analysis is done, but I'm going to go show you how it is being applied in a real world example. Because a lot of times you see these things in textbooks, but we're going to watch it together in real time, and I'll report back every once in a while. You know, a few days ago, I had mentioned this trade about a week ago. I've been building up a position as I started to notice this and some other fundamental reasons. But yesterday I did a long video on price, and now I'm doing the Wyckoff video, so we'll be able to check back in on this from time to time to see how it's playing out, which is not like your standard textbook once you've already seen it play out in real time. And we'll see how it succeeds or how it fails. So let's jump into it and start with the phases. So over here I have this same chart where I've started to mark it up. And so let's start with phase A. So phase A is where the prior downtrend starts to stop. And in Wyckoff terms, that's where you often see a preliminary support, PS, a selling climax, SC, and an automatic rally, AR, then some kind of secondary test, although sometimes a secondary test makes more sense to be in phase B. Just really quick here, and I'm going off script, so I might, I might trip a little bit on my words as I just did. It's a lot easier to identify these things once you have multiple phases identified. Once you see phase C and look back and see a phase B and look back and see a phase A, it becomes a lot easier. It's actually the easiest once you see a phase D, because a D and a B and a D are on the other sides of a C, and then you can look back and see if A is there. So my point is, it's hard to play these things in the beginning, and you don't want to anyway. The point of this is to position towards the end of D. Okay, so anyway, phase A, like I said, it's where you have this huge selling. So on this Microsoft chart, it's where after a large decline, you find some buying interest, but it's still under pressure. So you wouldn't call it the bottom. It's more like the first sign that demand is starting to appear. And the funny part is I have these fibs on here, and these fibs were from like the weekly maybe, or even the monthly. And the first part that I start to see a true PS around here is actually right when we broke a fib. And you can see later that is also first support is also first resistance usually. So you can see that that's an important level right there. And what happens after you hit the first PS is you get this selling climax. And generally it's this emotional, sharp sell-off where the sellers get really aggressive, the late longs are forced out, and prices pushes down hard. And so Microsoft, that's that sharp sell-off right here into the lower part of the range. And it looks ugly, but in Wyckoff, that's kind of ugly move that you can actually start to show there's a bottom processing that might be happening here. And then we get the AR. So that's the automatic rally right here. And generally the automatic rally happens because the selling pressure temporarily exhausts. And another thing to point out here with this PS is that you had a lot of volume. So we could see that buyers finally started to show up. You know, some people call this a capitulation. But the interesting part about the capitulation, it doesn't just mean you V-shape after it. Sometimes you have all this accumulation before it goes back up. But that is another important sign to see, which is the volume here, which is why I have a full chart with the RSI, the volume, my MACD, and I also have some IV rank, but that's because it's this chart from my actual Thinkorswim. And let's move on here. So now we've identified those few points. It shows us a few things. One is showing us where some support and resistance lines are. And so I start to see this as a trading range right here, from this 38.2 fib down to the 23.6 fib, but essentially 430 down to 400 or 403 even, which when we look at today's chart is kind of amazing because that's roughly where we've been falling for a while. And today we even fell 2.26, but look where we fell to. So I'm even more, I have more conviction in this analysis at this point because of that. And I better because I have a lot of shares, and I'll tell you what will happen if this breaks down or what I'll be looking for to manage these positions. But let's get back to the Wyckoff analysis here. And so then after the AR, you get a secondary test. And sometimes people put this still in phase A or in phase B, but essentially secondary test comes back down towards the selling climax area. So around here, sometimes it overshoots it, sometimes it's a little bit above it, but you'll just know it's that first dip after the AR. And I have it in phase B because it happened after this is either a weekly or monthly close. Thinkorswim puts these in, which is really quite nice. And there tends to be one in phase A and phase B often. But let's talk about what that is and phase B in general. So phase B is the messy part, really. This is where the market is building up its cause. Supply and demand are fighting inside the range, and that's usually not very clean. It can be choppy, frustrating, and hard to trade. And again, you're usually not trading these. You're waiting until these form, and you know that because phase B, C, and D started to form, and you can see these, react retroactively. And so it's generally not clean. And I could have included this secondary test in phase A if I wanted to, and then this could have been another secondary test. Although it did fail here and it went into phase C. And so phase C is really the important part that lets you know if we exit phase C that you have a Wyckoff pattern forming here. And so phase C is probably the strongest part of this whole analysis of this chart in general. One, because it goes down to this fib, and this may have been a fib that I drew based on it from the high down to here, which then becomes interesting that these were the points because these are after the fact if this was the low point. But in phase C, this lowest part is called the spring. And so in general, spring is when price undercuts the prior support area. And like we said, we had a range developing right here. And so it undercuts that support area and triggers stops, scares people out, and then quickly reclaims. And it's strong. It's essentially a liquidity event. It's designed to make the chart look broken right before it starts working. And that's what happens here when you have this spring back up there. And so that's what essentially happened in March there. And it looks like a classic spring. It shook everybody out. The weak holders were gone, and now it's resuming. People are probably chasing this, trying to get back in, all of that stuff. And so now we move into phase D. And so phase D is where the stock starts leaving the accumulation range at some point. And you can see that it does try to break out at various times. We recognize the support and resistance from earlier in the chart here. And this is where you start to look for two different things. The last point, well, three really. The last point of support, the sign of strength, and the backup, or another BU. It's actually called backup to the creek, but backup or BU, which coincides often with an LPS, and it did right here. And sometimes it's a little bit messier. Sometimes it's below. Sometimes it's higher. Sometimes it's a double bottom. It just remains to be seen. But essentially, what's going on here is this last point of support is where it tests the support from before, obviously, particularly after the spring. But what we're looking for here is it to hit support and then come back up and a series of higher lows. And we do have a series of higher lows ascending right here. And then we finally have what's called the show of strength. And so that's where price shows that demand is now in control. People want this. It pushes out of the range and proves the stock can go higher. And so on Microsoft, that was a blast up towards the 200-day simple moving average near the mid 460s or low to mid 460s, something like, actually we got 465 at one point, I think. And so that's what I marked as the SOS. It was a huge move and it looked like a breakout attempt. And yeah, it got rejected at the 200-day moving average. But the key point here is a rejection after an SOS doesn't automatically invalidate the SOS. I actually was in a lot of positions here and I took profit on the way up, but I've since re-entered as I still see this pattern playing out here. But we can invalidate it. It may get invalidated, and we'll talk about that. But what happens after the SOS is important because we did it on declining volume, which is exactly what you want to see. It's somewhat orderly in that fashion. And if we hold support here, that'll show me that this Wyckoff analysis is still intact. And so this is what you would call the backup to the creek, or BU, and it can also overlap with that LPS. And in general, the BU LPS is where price comes back down after the breakout to attempt to test whether that old resistance or support area has now real demand underneath it. So essentially breakout retest. And sometimes it overshoots it for similar Wyckovian reasons, or liquidity reasons, however you want to see it. And so on this chart, Microsoft is exactly testing that. And that's what I'm watching. Everybody was saying, if we lose 410 or 405 or whatever, it's not that simple. It's how we lose it, how it ends up closing, and if this analysis still stays appropriate. And the volume does play a big part of that here for me. In general, that's why I have this marked out as a really important part, and why I thought today was a great time to do it, because that's where we're hitting. So let's talk about what do I want to see next yet. Actually, before I do that, let me be clear about something, because this is not financial advice, and this is a position I'm managing. I'm not in Microsoft just for this reason. I'm in Microsoft for a lot of reasons, not only this pattern. And there are fundamental reasons I'm interested in the name, and those are totally separate from this chart structure. This is essentially an overlay, and I mean, it's an additional trade on top of a core position. So if the chart is setting up well, I might look for day trades, short-term options, tactical adds, etc. But if the chart weakens, I might avoid adding or reduce the short-term exposure, even if I still like the long-term fundamental story. So this isn't one of those things where all of my shares are based on this pattern and I have multiple portfolios doing it. But I just want to be clear on that, because it's not, always just one or the other. And a lot of people watching these want to just emulate trades. And I'm not saying you shouldn't do that. You could do whatever you want. This isn't financial advice, but I'm being clear about how I'm using it, just for full clarity here. And so what would actually make me question this Wyckoff read? Meaning, when would I say that I need to exit the position because it's either invalid or my analysis is invalid? And it would be a real breakdown below this BULPS zone here with significant volume that holds, not just like a one-day black swan move, not a temporary macro panic that immediately reverses, especially because this week could be that. However, oftentimes I will get out and get back in, just, being nimble. So it's not if I see a quick liquidity sweep under 400, which is actually what we saw today, we went down to 397. And we got bought up, which I really like to see, but I need to see that hold. But if I see more liquidity sweeps like that, that's still not going to invalidate it for me. I want to see Microsoft lose this 398, which I've marked out here, which is actually a fib on the way up from the spring. To the high there. And it had some other confluences, I believe, like I said, this other fib, which is roughly holding. So we have two sets of fibs there kind of in this area. In fact, you could see that's where all of the buying is happening. It's very interesting how those are playing in. I'm sure other people are watching the Wyckoff analysis. So if I see a real breakdown of that with volume, that will make me rethink it. But when I see stuff like this actually builds more conviction to me about the way that it's behaving. But we'll see. It could stay in phase D for quite some time. So yeah, that's pretty much what would get me out of the trade, or rethinking this analysis and looking for how I got it wrong or how I got it right, or how I can pivot, or if there's some other factors here to examine. So the summary is essentially this. Phase A was the stopping action, B was that messy accumulation, C is the spring, D gives us a bounce back above the spring and various signs of strength. Everybody wants to put just one SOS, but I'm starting to see lots of signs of strength here, where you have this nice bull flag going on and hitting upper resistance up there. That's all signs of strength for me. And then, now we're potentially watching for phase E. So that's the whole setup. It's not confirmed markup yet. Markup is phase E when we break out of it, and the stock still needs to prove itself. So if Microsoft starts reclaiming 411 and then 422 and then 431, I think this chart gets really interesting. So that's it. I said it would be a brief one, but it was a little bit longer. I kept it under 15 minutes, which is a lot for a Wyckoff analysis, a real live Wyckoff analysis with some explaining of what Wyckoff analysis is. So let me know in the comments if you agree with this Wyckoff read, of course. If you think that 200-day rejection was more bearish than I'm giving it credit for. If this kind of technical breakdown is helpful, please like the video and subscribe. I really appreciate it. I'm going to keep walking through the market, the charts and trade plans that I'm building in real time, and I'll catch you guys later today for a market recap. Thanks so much. Please subscribe. Happy trading. Stay safe.